good morning, good morning. How you guys doing this morning? Good to have you. It is April 26, 2024, and it's the end of the week. The end of the week has finally come, and take a look at what has happened with the euro. Very interesting price action indeed. It's pretty much in line with our expectations of what we were mentioning at the beginning of the week. In fact, if you watched our video that we did last Sunday, the CFTC data, that video we were talking about how we were expecting price to head higher, and that is definitely what took place. I mean, last Sunday was the 20th, so price was, give or take, around here somewhere. Yeah, around here. I said watch for a move higher, and that is what took place. Just like that, straight up into supply. But we weren't done yet. We said it's going to head into supply and then most likely eventually continue drifting through that supply area and heading even higher. So now we see price had temporarily paused, moved to the downside, and now it's heading even higher. So now we're getting a retracement, but we do suspect that this move to the upside is not done yet. So I wanted to go over the euro in some detail with you today and take a look at what has brought us to where we are and what is likely going to take place, okay? So again, welcome. Thank you for joining me today. It's a gorgeous Friday. Oh, gorgeous. The sun is out, clear skies, the birds are chirping. It's just wonderful. Wonderful. All right, so let's get started here. So going back and taking a look at what has been transpiring with price, we can see that retail sentiment, whether we like to believe it or not, is a factor in the direction of price. I mean, I hear a lot of times that retail traders, they're such a small percentage of the market, there's no way that the banks would even be focusing on them. And it really makes me wonder where people are getting this idea from. Where are they getting this idea from? Is it their idea or somebody putting this idea into their head? You know, because if you think about it, I've heard it so many times from a lot of people. Every time I introduce this idea that the banks are doing something to manipulate retail traders into reacting in the markets in a certain way, there's always a percentage of people that say the banks don't even care about retail traders. And I ask that because before making a statement like that, you should have some proof, right? Just like before I make a statement that the banks are about to lure retail traders into doing something, I have proof, which is the reason why I say it. I have proof. I have evidence to support what I'm saying. So, and I've been pointing out this evidence for quite some time. Just like I've been pointing out how CFTC data, even though people say, oh, it's always late, it's always, you know, a few days late or a week late, doesn't matter. If you're too quick to write that off and not use CFTC data in your analysis, you'd be missing out on a massive piece of data that you can use to correctly and accurately predict the movements of the market. So when I say retail traders are playing a role, it's because they do. And I'm sure that this idea that retail traders, they take up such a small percentage of the market, so therefore the banks are not focused on them. I'm sure this idea is being planted into people's minds some way, somehow, because if you truly believe that, then that would keep you from investigating and seeing whether or not there is something going on between the relationship with retail and institutional traders, or the banks, I should say, the big banks. And so, as you can see, this is one of the reasons why I started mapping out the positions of retail traders on my chart, is because I wanted to see visually what I was already believing in my mind. Okay, I had believed it in my mind because just tracking what retail traders were doing and tracking the formations that were being created on the chart, it became apparent to me that what traders were being taught to do in all those conventional technical analysis books was they were being lured into making the wrong decisions. And so when analyzing the media and the news reports and all these different sources of information regarding the markets, when I was looking at what they were posting, I was also seeing a big difference between what they were saying and what was actually taking place. When you are able to follow the storyline of price and you tune into CNBC and you listen to what they're saying is happening in the markets, and you realize the two are totally not in line with each other, it starts to make you question things. And so I was seriously questioning these things. And when I started to plot the information on the charts, it became extremely apparent. I mean, let's take a look back here again at the beginning of March. Okay. Beginning of March, when we had retail traders reach, 88% short positions. That's quite up there, 88%. And when you look at the US dollar data releases, you can see how they play a role in making shifts in price as well. We had US jobless claims, and that was over here. It was positive for the dollar, negative for the euro. Over here at the highs, we had US dollar NFP, which was positive for the US dollar, negative for the euro. And you can see price dropped and then eventually moved right back up. Okay. And over here, price rallied, but then eventually moved lower. The bottom line is, look at the positions and look at how retail traders are reacting to the data. It's quite remarkable, and it really does paint a really clear picture of what is taking place here. So after we received that initial drop, this was a significant drop, and I told you before it took place, so that you would see that the logic that I am applying to the charts is in line with reality. I want you to notice that up here, when retail traders were in the 80%, price was up in the 109.40s. Okay? You see that? Okay. And then they bring price downwards significantly. And when price was down here, they were in the 81%. That was give or take around where we are now. 107s, 17s, in around that area. But let's now take a look at the next time that they lured retail traders into being massively short. It was right here. So you notice how far down they were able to get price. Okay? Because remember, the way price is moving on the charts, the banks are trying to accumulate a big short position at high prices. So how do you accumulate a short position at high prices? Well, first of all, you have to get retail traders to accumulate short positions at high prices, because that would help you to to acquire the positions that you're looking for to short the euro. I mean, you think, if all the big banks are working together, which I believe they are, if all the big banks are working together, do you think Goldman Sachs is going to short the euro by trading against JP Morgan? No, it's not going to happen. All the other banking institutions that don't have a clue what's taking place, yeah, potentially. But the big banks who I believe are working together, they're not going to be trading against each other. So what do they need to acquire a position? They need people, retail, hedge funds, smaller banks, smaller investors to be lured into taking on positions that eventually the banks will want to take on. So when they switch from being short to long, okay, from here down here, who do you think's taking on those short positions? The institutions who are looking to short, right? But they're looking to short at high prices. So shorting here, because they're at 81, 90%. What do you think happens when price drops? They offload those shorts. But you see how now we're slowly moving down the chart. Each time the retail traders are acquiring massive short positions, we're getting lower and lower on the chart. See, the first time was up here in the 10. Let me do this here. How about we do this here? First time was in the 109s. Second time was in the 108.60s. And it looks like the next time is going to be in the 108s, 107.87s, give or take. This is my estimate. But the key thing here is every time they're acquiring massive shorts, price is becoming lower and lower and lower, moving down the chart. Okay? So where are we at right now? Well, last time the banks dropped price was right here. Okay. Shoop, 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 right there. And what did they use to initiate that drop? US dollar CPI. Okay. So US dollar CPI numbers came out positive, which was considered to be negative, and the euro dropped aggressively. But this was already after retail traders were offloading their short positions. Okay, because you could look at the numbers. They were up in the 93s, slowly became down to the 67s. So they were already offloading their positions. When price dropped, what did retail traders think? They thought, this is overblown. This is going to bounce back, because so many times when they're looking at the charts and they're looking at the data releases, what they're seeing is that data comes out positive for the euro, price rallies or spikes up and then retraces. Right? They see this. They've been conditioned to believe that this will take place. And so what do you think they're thinking when they see such a big drop in price here? They're thinking, oh, it's just a matter of time until this comes back. Right. Not this time, though. Right? So what do? They acquire long positions. And you can see it here. 61%, 80%, 90%. All the way down. How much money do you think was lost on that drop? Quite a lot. Retail traders lost a lot of money on that drop, getting into long positions. All right. Then they started to bail on them. Then last minute they started going in again. They might have made a little bit of money on this rally here. Then price dropped. They started to bail again. Okay. And then all throughout here, we saw them bailing on short positions. Okay. And then US dollar PMI came out negative, which was positive for the dollar right here. And ever since then, retail traders have been exiting out of their long positions and getting into shorts. I mean, it's the exact opposite of what they should be doing. It's just mind-blowing to me how they're trading. Because when you are in line with what is taking place, what's truly taking place in this storyline, it's pretty clear to you what should be happening, what a trader should be doing. When you see price action, or when you see retail traders and their positions being the exact opposite, it's mind-blowing. So anyways, thank the heavens the market is the way that it is, because it brings us a tremendous opportunity to profit from this market. If the market wasn't the way it is, and if it was actually very random, our opportunity to make money would be very limited. But because we have a lot at our disposal to allow us to figure out storyline, number one, and price direction by the institutional buying and selling that comes into the market. I mean, they're basically handing us a map of how price is going to move. Really. It really is that simple. Now, acquiring this knowledge, was it simple? No, it wasn't. Understanding and applying this information onto the chart, is it simple? No. That's why I started a school, was because when I was posting my analysis, everybody wanted to know how the heck I knew that price was going to do that. Because I was consistent over and over again. People are like, how is it possible you're so consistent? People wanted me to teach them. So I started a school. At first, I didn't want to share these things that I had learned, because I spent countless hours learning these things. And at the beginning, I thought to myself, I don't want to share this with people. I worked so hard to attain this knowledge. But it got to a point where I said, you know what? What's the point of being a trader and doing it by yourself? And what are you going to get out of life if you just keep this knowledge to yourself? So I started sharing, and that's what allowed me to start the school, and we've been doing that ever since. So is it easy to learn these things? No. But I can promise you that if you joined the school and you took the classes and you put in the effort, it's like anything else in this world. If you want to be successful at something, you got to put effort. But I can promise you that if you come and join the school, you take the classes, and you actually put in time and effort into doing your homework, submitting, watching the video lessons, studying the previous classes, journaling what you're learning, you'll definitely find success in your trading. All right, so let's get to where we are right now. And so what you can see is right now we're seeing a little bit of a pullback on the euro. Beautiful. But I believe what is about to happen is that. Okay? That is coming next, in my opinion. My opinion. A big move to the upside. Why? Well, right now, retail traders have been acquiring a short position. And I think that all that's required is another push to the upside to lure more retail traders in short. Soon, shorts will enter into the 70%, late 70s, early 80s, mid 80s. And then next week, we'll likely see price peak, but maybe not. It could take a little bit longer. You know, I look at the calendar, and I see next week we have the Fed interest rate coming out May 1st. Okay, so that could be one of the things that sparks a big move. And jobless claims coming again on Thursday, non-farm payrolls on Friday. So we got a whole host of things taking place for next week that will cause some massive volatility in price. So, in amongst all this data that's going to be coming out, there's no doubt in my mind that price is going to very likely move higher. Retail traders are going to amass a huge short position. They're going to freak out, offload those shorts, likely because of a response to one of the data points that are coming out, and then we'll start to see some big moves take place. All right, ladies and gents, that's it. What do you use to screenshot pin images? What a great session, as usual, very informative. What do I use to screenshot? It's a program called APowerSoft. All right. Okay, my friends, that's it. I hope you enjoyed today's session. Happy Friday. Stand the week. Yes, I know for traders it's not the greatest thing in the world, but it's nice to have the weekend off. Soon the CFTC data will be coming out. I'll be number crunching, doing some analysis, and then eventually putting together a report for members this weekend. So if you want to join, learn more about how we do our analysis, or if you want access to a whole range of analysis, join our school. We have a observation journal where we keep track of the supply and demand and the movements of price on all the major currencies, gold, oil, and we're also looking at nat gas and a bunch of other stuff. So anyways, we'd love to have you. Come and join us, and yeah, that's it. Have yourself a good weekend.